Hello traders and welcome to another video review. Today is Tuesday, October 22nd, 2024. Let's find out what's going on the economic calendar for today. So, Asian session, almost non-event. We got some data just from the Germany in form of the Buba Balz to give a speech at 7:30. Then we have some retail sales from Poland, and then we got the data from the Eurozone. Again, ECB Macau will give a speech, and then only at 2:30 we got the RMPI data from Canada. German President Nagel will give a speech 3:15, and then 10 minutes later Bank of England Governor Daly will give a speech, and then at 4 o'clock FOMC member Harker will give a speech. Plenty of speeches today, including ECB Lane and ECB Macau later in the night, and at the end of the day one final data scheduled for release: API weekly crude oil stock data from the US, scheduled for release at 10:30. And that's it. Plenty of speeches today, almost no data, no medium important data, no very important data for Tuesday. So let's just jump straight on to the technical part of our meeting and start with the euro dollar. So the 4-hour chart of the euro dollar is moving beautifully, beautifully textbook example of the technical analysis and the playing with this short trend line. Again, first correction towards trend line 0.43 new low, second correction 0.48 new low, third correction 0.55% new low. And what's happened here? We hit the trend line. Let me just make it longer. I will try to make it longer, just a little bit longer. There you go. And that means that this market is still under the bearish pressure despite the multi-bearish divergence or bearish multi-divergence between the new lows here on the chart and the RSI indicator. We keep moving lower, which means this market is trending strongly to the downside. And that's a good news for the bears, of course. Where are we heading to? We are heading towards this level, 1.0778, the low of the August 1st, 2024. So this looks like a very, very big movement to the downside after the failure of the wave 4 and wave 5 to the upside was made here. Remember this zone here. We've been trying to add one more wave here. It looks like we got wave 3, wave 4, big wave 5 into some messy ending diagonal, and then straight down after the FOMC interest rate decision trigger this move to the downside. So now we are waiting for that level to be hit despite the extremely oversold conditions. Look, the bears, the bulls are not able to switch above the level of 50 on the 4-hour chart of the euro dollar, which means the bearish pressure is really, really strong, and we should not be surprised if the 1.0781 level is violated soon. All right, so please stay focused on this level. We talk about the crude oil because of the today's data. So what is crude oil doing on a 4-hour chart? The first thing is that just recently we've been moving inside of this very narrow zone. All right, we got some technical levels here. We got the level for example, this technical support might be interesting here, 69.31. We got test of this level eventually. The lower, there's one more level here, 68.63, and together they create a demand zone. It used to be supply zone, but after this breakout here with that candle, it become the demand zone. So of course we got this high here, and now we are going lower. The market keeps testing the level of the 50 periods moving average, and now it's been rejected from this level. So please pay attention to this. Look at the bearish pressure. The bulls are not able to move above the level of 50, so they might be moving lower soon. And if you can see here, this situation here on the RSI corresponds with this level basically, right? So that's the game changer in the short term. 71.56 from the technical point of view, and the lower level here is the one that was tested many times, 71.28. So those two levels will create the supply zone, right? And those supply zone is acting as the level of 50 on the RSI. Okay, right? So if we cross above this level here, above the zone, above the supply zone, then we will definitely cross above the level 50 on the 4-hour chart on the crude oil RSI. Okay, now we are most likely going lower. We are most likely going lower because the bearish pressure is quite strong, and the next target for bears is 66.34, which means the price for the oil will be really low. What's more, there is one more interesting line we can add to our situation here. Maybe something like this, maybe something like this should be done a little bit like that, and that's the orange trend line. So we keep trading below the trend line. We definitely retraced more than 61% of this last movement to the upside, and it looks like the bearish pressure is quite strong, and the bears are keep pushing this market to go lower, basically. All right. Now, what we should speak about today is S&P 500. The S&P 500, let me just switch to daily because it's much more visible. There you go. The S&P 500 is finishing this possible ending diagonal triangle that will eventually finish with this movement to the downside. I should make it red, and I should make it thick as a brick, because this might be exceptional pullback or exceptional correction. Last time we got 10% correction, and then we got after like a over almost a month, we got the new high, and this market keeps moving higher, keeps moving higher, keeps moving higher. So this is only the internal correction. It's not the end of the multi-year uptrend on the S&P 500. Quite opposite. That's just a hefty correction. The last one was in the month of the July to August. So that was something like almost July, August 5th. So almost 3 weeks. 3 weeks correction, 10% up we go. So please consider the fact that the S&P 500 is still in uptrend. All right. So we talk about the S&P 500. We talk about the crude oil. Now let's switch to the Bitcoin. Just recently, I warned you guys that possibly the wave 5 is under the. It might be completed soon, might be terminated. And it looks like we've done it at 60, what's that level? 69,500. Let me just take a look. 69,555. This is the level that there you go, that we finished the wave 5. And now we are entering the corrective cycle, wave A, wave B, and wave C. Now the correction went almost to the lows of the previous wave 4 territory, 63,544. The technical support is located at 65,446, and we shouldn't go below this level. Finally, we got the bearish divergence between the wave 3 and wave 5, and finally we get lower. So as you can see, this momentum is clearly showing us that the correction is coming. The correction took place, just a really slight correction here, not that deep whatsoever, but we are already below the level of 50 because we've been coming from the extremely overbought conditions, right, on the 4-hour chart. So now it's the time to move above this level, maybe towards 68,460, and then complete the ABC correction. If this is the simple ABC correction, it should be completed somewhere around 66,500, and there we should be ready to move higher. However, it is quite possible that we can do a bigger correction. So let me just move my old labeling for the corrective cycle. Okay, so we got the wave A to the downside here. Maybe we will go something, maybe we'll do something like this. That's a quite probable scenario. The first one, when the wave C is completed just in the area of the wave A, and then if that's not enough, then we will complete the wave C around the demand zone between 65,110 64,475, and then with that correction, which would be visible correction because it will be bigger than any correction here, wave 2 and wave 4. So we have the of course, the overbalance of price and time in that situation. When we're done with this correction, the market is ready to rally higher. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.